Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks that are on the move today. I'm Paul Sweeney, Lisa Mateo, and we're joined by Bloomberg's Denitza Zakova. What do you got for us, Denitza?
Let's start with the robotaxi competition, which is heating up. We just had Waymo starting to run in New York, but today we're
Waymo's in New York?
Yes. Didn't you see the photos? It's on Twitter.
Okay, all right. I'll check it out. All right.
Here we go.
God forbid I missed something.
I didn't hear that either. Oh my gosh. Anyway, let's start with Uber. It's teaming up with the electric vehicle maker Lucid Group and tech driving startup Nuro to launch a robotaxi fleet. The reaction on Uber is actually muted. The stock was down, but Lucid, it surged 62% initially in pre-market trading. Mm-hmm. Now it's about 30%, but obviously incredible gain. Of course, this is a much smaller company compared to Uber, but still the price reaction is really impressive. Uber announced Thursday it will purchase and operate Lucid SUVs outfitted with the Nuro driver technology. They'll be part of their ride-sharing network. We're talking about at least 20,000 vehicles over 6 years. They're expecting to see them in unidentified U.S. cities in 2026. So clearly the goals are moving fast.
Okay.
We're talking about very recent moves. Lucid is actually up 2% year to date. So today move is still not bringing that much, the stock much higher. The ticker is LCID.
I still know I'm not sold on the robotaxis.
You're jumping in one, I know.
I know, one day. About this time, Paul, I get up at 2:30 in the morning, right, for work.
What?
So about this time is like a Starbucks run because you need that little extra boost. But their shares not doing so well, Denitza. What's going on?
For sure. Starbucks has had a rough ride. And today they're having a downgrade by Jeffries. They said Starbucks has run too far. They says the brokerage has put underperform. Since its last quarterly earnings, Starbucks share price has outperformed the S&P rally. And to Jeffries, that really isn't warranted. They see the stock running way ahead of expectations. One reason we've seen some rally there is their $10 billion price tag that is attached to their China operations, which they're in the process of selling. But for Jeffries, this is way too ambitious given the assessment of their current operating business. So clearly some negativism there. They also look at same-store sales down 3% in the third quarter. So that's another reason they're not so bullish on the stock. Starbucks is flat year to date, but today definitely we're seeing more pressure. The stock fell as much as 2%. Now it pared back some of those losses.
All right, one more. What do you got for us?
We have Steve Madden. It's a famous shoe retailer, and I love the ticker. It's SHOO, and it's up 6% ahead of the. It was up 6%. It's coming off a Citi upgrade from neutral to buy, saying the footwear maker margins are bottoming as fashion trends are turning more favorable. The stock was actually is now down 40% year to date. So this is much needed bullish upgrade from analysts. It has 4 buys, 6 holds and 0 sells. But clearly now we're seeing some optimism there. They see second quarter EPS will mark the low point for SHOO's margin as they navigate significant tariff pressure this year. But from here onwards, they're seeing a lot of optimism. So many moving pieces. They believe the market is underappreciating their acquisition of KG and seeing upside from here.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.